China's COVID outbreak is spooking Wall Street. That's our top story today on the Wall Report. I'm your host, Greta Wall. The major indices are all lower today as a COVID outbreak in China prompts fears of a global economic slowdown. And those concerns are weighing on the bond market, with the benchmark 10-year Treasury yield falling more than 10 basis points, about 11 basis points currently, to 2.79%. Now, this comes after that yield rallied last week in anticipation of the Fed getting more aggressive on inflation, but now fears of the global economy slowing down due to this latest outbreak in China are causing those yields to slip. And oil prices are also down sharply today on demand concerns prompted by that COVID outbreak. West Texas Intermediate crude futures falling more than 5% today to under $97 per barrel. Brent crude futures also down more than 5% to about $101 per barrel. Authorities in Shanghai put up fences around residential buildings amid a continued outbreak there, and a few cases have also now been identified in Beijing, prompting fears of an impending lockdown in that city. China's zero COVID policy threatens demand levels for oil, as China is the largest crude importer in the world. Now, meantime, Twitter shares are up today, rising about 3% on reports that it could accept Tesla CEO Elon Musk's buyout offer. Musk secured $46.5 billion in financing for a tender offer last week after initially offering Twitter $43 billion in cash. And Twitter's board was reportedly in talks with Musk all day Sunday into early this morning regarding a takeover deal. Some analysts have speculated that Twitter wants to accept the deal before reporting possibly disappointing Q1 results. The social media giant does report Q1 earnings Thursday morning. And in earnings news today, it's a huge week for the first quarter earnings with some major names on the schedule. But today, Coca-Cola shares are flat after beating Q1 expectations. The beverage maker reported adjusted earnings of 64 cents per share on $10.5 billion in revenue. Now, that topped analyst expectations on both the top and bottom line as revenue rose 16% year over year. Coke said halting its business in Russia will dent revenue and operating income by 1% to 2% this year. But the company still reiterated its full-year outlook for revenue growth between 7 and 8% and comparable year-over-year earnings growth between 5 to 6%. Meantime, Activision Blizzard shares are down about 1% today after missing Q1 expectations. The video game company reported adjusted earnings of 64 cents per share on $1.77 billion in revenue, and that was lower than analyst estimates on the top and bottom line. Activision blamed that miss on lower demand for its Call of Duty game franchise as gamers return to pre-pandemic habits and are spending less time playing games. The company did not provide any guidance as Microsoft's acquisition is pending. That $69 billion deal is expected to close by June 30th, 2023. It's been approved by both company boards, but is still awaiting regulatory approval. And Microsoft is among the huge earnings reports that traders are gearing up for this week. Tomorrow morning, the focus will be on Pepsi, UPS, and General Electric, among several others. And then Microsoft, Alphabet, and General Motors are up after hours. Be sure you're subscribed to my Coffee with Greta newsletter to get details on the latest earnings reports in your inbox ahead of the market open each day this week. And I'll see you all back here for the Wall Report tomorrow. Give this video a like before you go.